And my colleague Agni has caught up with Britannia and Pidilite. But first, watch this exclusive interaction with Britannia on the outlook. And Britannia stock actually doing well today. We'll pull up Britannia on the outlook for the FMCG sector.
Now, we've given that in our last investor analyst clause as well. There is a bit of a consumption headwinds that we're seeing, and we've had a strong single-digit growth in terms of revenue and a 8% growth in terms of volume, and that's the kind of trajectory that we're seeing this year. There is a slowdown while rural is coming back, as you heard today morning from all FMCG players, that rural is coming back, and that's exactly what we've seen as well. But there's been a slowdown in urban consumption as well. And in our analyst call, we did give details of why we're seeing those kind of trends. So having said that, I think that's the kind of trend that we expect to continue to see, especially in terms of where the inflation's coming through. That's the kind of thing that's happening that's impacting the entire consumption story.
Right, sir. So we have at NDTV Profit come across some ground report that Britannia is increasing prices across certain products starting December. So can you comment on how that price hike is likely to play out given the sluggishness in urban demand and how it's likely to impact margins for the company?
Sure. So I'll not comment on the margins of the company because that's something that's forward-looking. I'll not have. But we did mention in our analyst report as well that there has been a steep increase of inflation which has happened, flour prices as well as especially cocoa pricing, and also third one is the entire duty that's increased on the palm oil, which has led to almost a 40% increase in terms of cost of palm oil to the consumer. So having seen this as an organization, we've taken multiple steps to first in terms of cost optimization at our end. We run very successful CEP programs, which is cost efficiency programs, to kind of curb it so that we don't have to pass on the entire inflation to the consumer. But clearly the price increase, some in parts, is inevitable. We've talked about 3 to 5% price increase, which may not even cover the entire inflation. But the idea is that we put that in phases, and some steps have already been taken in Q3, which you were saying in December month, and some of them will come in Q4. So we'll do it in a phased manner so that the consumer is not directly impacted.
Right, sir. In terms of geography, which are the geographies where you're seeing the slowest demand, and when do you expect these geographies to pick back up?
No, I can't give specifics here, but clearly there is some bit of stress in the metros, and that's exactly what we shared in our analyst deck as well, that there is first time we are seeing some bit of pressures into the urban sector, especially all the metros which are there, and rural actually is coming back, and we've been doing a lot of work in the rural in terms of our distribution that works well for us, but urban demand is a bit of which is slowed down, and largely due to inflation is something that we've called up at.
Right, sir. Final question. In your analyst call, you had mentioned that the company is exploring options to enter the snacking business. Any progress on that front?
So we are always, as an organization, continuously on lookout for spaces that we want to, white spaces where we have the right to win. We've been piloting on the snacking side for some time in just 2 states in south of India, and there is a pilot that's going on, and we're seeing the demand that is there. So we're working on that. It's working well for us. There's a lot more work to be done that side, and you will hear more from us on that.